What's up, guys? This is Carter Thomas with Coin Mastery TV. If you are new to the channel or if you're coming back and you like what you see, share this video with somebody who's just getting into crypto, somebody who's thinking about getting into crypto. Love to get more people involved, hearing a different perspective, a macro perspective, and we're talking about how to dominate this financial revolution through better decisions. Now, today what we're talking about is a little bit about Bitcoin, about Litecoin, the reaction that Litecoin had to the market. We talk about altcoins, and really about this, what's driving a lot of these huge price increases and the psychology behind this, which I think will help you guys as you see a lot of these altcoins and prices just going through the roof. I think that the theme of this video is going to be how to control overtrading, how to control FOMO, so that you can keep your profits. We're going to touch on a few bigger macro issues, specifically around a really interesting conversation I had yesterday. I want to talk finally a little bit about taxes as it relates to crypto. Now, I'm obviously not a financial advisor. None of this is financial advice, especially the tax stuff. I am simply relaying information so that you can go and do your own research, because I think it's the end of the year. Hopefully you've been thinking about this a little bit, but this may help as it relates to overtrading and as it relates to keeping more of your money, which is really the name of the game. You know, you starts off thinking, oh, I got to make all this money. And then you realize, I actually need to keep the money too. But we'll get to that. Bitcoin's had, in Bitcoin terms, a relatively horizontal 24 hours. And what I think the only notable interesting thing would be, since yesterday's video, is this big dip, right? And specifically this candle. I'm looking on the 30 minute. I guess we can switch it over to the 1 hour and you can see it a little bit better here. We can see it is a wick off of this candle that happened very quickly. And remember yesterday we talked about, if you're looking to buy lows, to buy dips, price is secondary to volume. And as you can see here, it's not the biggest volume, but this is when the volume spiked the most. And you can see that is the lowest price. Doesn't necessarily signal the end of a short-term bear run, and move it back up to the bull side. That's hard to say. This volume isn't clearly the biggest in recent history, but it did provide the support necessary to keep this price up. So remember, this is true on any coin, but Bitcoin especially, because it's got the most volume, it's got the most money being exchanged. If you are trying to time it or find dips, volume is everything. And the bigger the time frame you can do, the better, because that's going to signal a bigger support area. The shorter term you do it, the harder it is to see a real trend change. You're looking more for day trading type stuff, but that's it. I mean, that's the big news. And that's the only thing you can really do when it comes to Bitcoin, other than dollar cost averaging and potentially waiting for a bigger dip. But that's what I've been looking at. And that's what's really the only interesting thing. So a lot of trading is a waiting game. And I think that that's something that gets overlooked. And it's something that I learned the hard way. I mean, if you guys have been watching this channel, you've seen me I started recording this in July, and I've traded a lot, and luckily I've beat Bitcoin returns based on my trading, but a lot of trading has not turned out that well. And a lot of it is because I just didn't wait for the right trades. And in the right trades always come down to pretty good fundamentals and following pretty simple rules like this. Dips come on high volume. So I think that's a really interesting takeaway that I've had, is that often time is your best friend. It always comes back to fundamentals. I'm focusing a lot on Bitcoin this month personally. I think that the altcoin, this type of movement, these 60%, 70% in one day, while it's extremely tantalizing, I don't do well in that. I tend not to make a lot of money in that. It's just not conducive to my personality. That's just not how I found works. This is sticking to the big ones, bigger, slower moves, at least in times like this, and setting up bigger trades. So I'm watching Bitcoin. I still think Bitcoin's going to do well. Now, the other big news or interesting news I would say is Litecoin, because Litecoin had this incredible run, and as it hit $418, whatever, I mean, it's ridiculous, right? I think anybody who doesn't think it's completely ridiculous, maybe you just need a little bit of a reality check. And while it is really exciting, we knew that there was going to be a pullback, and you could see that it pulled back, at least on, we're on the 30-minute right now. This is the first obvious level of, this is the support where previous resistance was. And it seems to be holding this relatively well. I mean, we're on the USD chart. We'll look at the BTC chart, but you can see that it's sitting right there. And whenever you see a resistance level right here, which would be a support level on the other side, if you see these candles or these wicks, I would say, where they pop down and there's a fair amount of volume, a lot of this is just triggering a ton of stop losses, and they start to cascade. Meaning, if people leave their orders open on Bittrex or GDEX or Gem or any of these exchanges, and one of them gets triggered, the price will start to accelerate down until the buy volume comes up to buy it up. Right? That's why you get these kind of random spikes, typically at previous resistance levels. So if you're ever layering your bids, you often want to layer them a little bit below the previous resistance, because you may be able to tag some of these, and then you'll set a stop loss pretty tight underneath that, because if it isn't triggering the stop losses, if it actually is just movement in the market, it's going to keep blowing through that and then go to the next big resistance and support levels, which arguably could be 198, 231, all the way down to, let's say, 175 area. Well, this is kind of a textbook way that this sort of thing works, and Litecoin is proving it. So if this holds, it's going to go back up. I mean, over the next 24 hours, we will see what this thing does. But this line 268, give or take. I mean, I guess you can get a little creative. Let's push this. Let's go to the 4 hour. You can see it a little bit better here. Maybe 257, like right around there. It's not bad, right? I mean, it's interesting. The only concern right here, this is on the USD chart, is these green candles going straight up, but I think that's just because of the time frame, right? It actually looks a little bit more filled out when you go to a smaller time frame. So keep an eye on Litecoin. I mean, this could be enough to fill it back in. So these two have been really interesting. Ethereum's obviously interesting. I don't really trade Ethereum just because I've owned Ethereum for a long time. Maybe an emotional bias, but honestly, I'm more interested in other coins other than Ethereum at this point. That's my own personal opinion. So moving over to the altcoin market, I just use Bittrex. Binance is obviously a great platform, but Bittrex seems to be a little bit easier to look at and has a little bit more volume on certain coins. But I think the thing I wanted to focus on is Ripple. Now, I do not own very much Ripple at all. If you own Ripple, congratulations. I did not think it was going to do this big of a run. So I am more than happy to say that I misjudged this bull run. And it's continuing to go huge. All the rumors, whether it be Uber, Coinbase, Amazon, I mean, who knows what the integration is going to be. But I think the big takeaway that I've seen on this is how powerful the story can be, and it's not exclusive to small coins. Sometimes the biggest coins are the ones that are going to have these huge bull runs. So when you're looking at coin market cap, right? Let's go to the front page here, and you're looking at the market cap of some of these coins, and you think that it's already whatever. Let's say it was $20 billion before this run, or $15 billion. That's too big to have a huge run. That's actually a fallacy. The size of the coin, as Bitcoin proved in the last week, does not matter as far as what's going to drive buying behavior in these markets. Now, more importantly, for anybody out there, there's two decisions to make. One, if you hold Ripple, do you take profits or not? And two, if you don't own Ripple, do you try to jump on these huge FOMO pumps? And the first thing about taking profits, that really is your own preference. I think that if you truly believe in the coin, then it's up to you. I always say you take profits if you think that Bitcoin is a better investment, because you're taking profits into Bitcoin typically. If you think that the coin you own is a better investment, there's no need to take profits. Like risk management wise, yeah, you could take it, but you're putting it back into fiat. It really just comes down to which you think is going to get you the biggest return. Now, this is obviously a very aggressive style. Most people would say you want to protect your risk first, which is how you should do it. I just know that 95% of people watching and listening to this are here to make money. And that's the truth of the matter, is that you should put the money into the thing that you have the best thesis on providing you the best return. So that's how you always evaluate any sort of situation where you're taking profits. Now, the second situation is, should you try to FOMO into these runs because they seem to be going bigger and longer than ever before? That's your own call. My personal opinion is that it's a very, very bad strategy, because you may catch one, you may catch two, but the one that you don't catch is going to be the one that wrecks you, and because you maybe put the most money into the one that isn't the right one, or whatever it may be. So I would really try to encourage people not to do that. And the only reason I say that is because I've tried that many times, as have many of you, I'm sure. And this market is driven on this idea of FOMO. A great quote a buddy of mine told me once is, he's just like, people are just looking to buy stuff. They're always trying to buy stuff. I think we talked about this the last few days. And just like be smart about it. That's all I can say about that. So it is what it is. I'm really focused on Bitcoin. I think Bitcoin's going to continue to have a big run, more than anything else. Now, along those lines, South Korea is making headlines last day or two, where they are really starting to put into place regulations. Now, they're not going to outlaw any sort of crypto or anything, but what they're doing is they're trying to stop young people from trading on exchanges, and they also want to start doing more about like fraud and money laundering. So they're increasing the amount of verifications necessary. And whatever politics and how you feel about that aside, this is it's good in the sense that it's formalizing what's going on. It's also good in the sense that it allows bigger money to come in. But I think it's also driving a lot of the Korean money to go into the exchanges the last week or so, is because people know that this regulation is coming, and they just want to make sure that they can buy before anything bad happens. It's a way of hedging themselves against government regulation. And I think that's what a lot of people do, not necessarily in the United States, but in countries where it may be a little bit more unilateral in terms of how fast they can implement regulations. That's where you often see more, not even speculative, but frenzy level buying behavior, is because the way the system is built in different countries creates that urgency. Like, if I don't do it now, I'm never going to be able to do it, type of thing. So this is really interesting. The other reason this is interesting is I had lunch with a buddy yesterday who he's very dialed into the crypto world, and he's more on the investment side, and he talks to a lot of people in the regulation world and everything else. And he provided a really interesting perspective where, at least in the United States, there's a big focus from the government standpoint, on regulation, in the sense that it wants to protect the customers. It wants to make sure that people do not get screwed out of money by some ICO that takes your money and just sets off into the sunset, or some exchange shuts down and rips everyone. Like, that is the number one priority right now for a lot of the government regulators. The secondary thing is this a legit platform? Do we need to shut down Bitcoin, or is there any big threat to the ecosystem? That's not for a long time. The immediate piece is just to protect quote unquote, protect consumers, protect unaccredited investors, as they're talked about in the United States. Meaning, there is, in my opinion, there is much less of a threat to crypto and Bitcoin in the near future than people may give credit to. Short of something catastrophic happening, if Bitfinex and Tether comes out and that goes down, that's obviously an exogenous threat. You can't predict that. You don't know what's going to happen. But when it comes to government, in line with what you see around the world, the number one piece is not to shut this down, to keep the money, to get bankers and governments rich. It's to make sure this doesn't get more out of control than it already is. And what that leads to is the idea of ETFs, right? So as these futures markets, which next, I think Sunday night, CME is coming out with the futures, and this is the real futures market. This is when you're going to see real volume. This is when you're going to see real people coming in, throwing down real bids, and you're going to see things start to unfold. The ETFs is when this is the big thing, because the ETFs is when retail investors will feel much more comfortable putting money in and taking money out, because they know how to buy and sell an ETF through their Charles Schwab or E-Trade account or whatever it may be. Similarly, they can also buy this into, let's say, a 401k or an IRA. They can put it into institutional products that already exist. So this is the big thing, in my opinion. I think that the ETF and getting the ETF approved will make up for anything else that gets in the way between now and that happening. So even if an exchange went down, even if the SEC came after a ton of ICOs, even if there was all sorts of fear and all sorts of crazy things happening, in my opinion, it would all be washed away as soon as this sort of thing in ETF goes live, because the amount of growth would dramatically supersede any downward pressure that comes, even with shorts on the futures. So I'm really bullish on this. I mean, the amount of money that's coming in, I can't stress it enough. It's not even just people coming through Coinbase. I mean, just the institutional money. It's just nuts. And we're at the end of the year, and in January, they're going to come back to our offices and say, okay, let's take a look at this crypto thing. And that's when you're going to start to see some real moves happen. Even with it being so speculative, not being any earnings reports or anything that they can bank a value investment off of, a lot of it just comes down to the custodial and the institutional ability to put money in. Now, along the lines of what we talked about with Ripple, even with Litecoin to a certain extent, I think that one thing that I know that a lot of my time or a lot of my mental energy is spent trying not to fall into this. And you're on the social networks, you see many chat rooms, you're all over Reddit, or at least I'm constantly scanning for market sentiment. And one trend that I see, especially when you see these big pumps going, is people having the internal dialogue where they say, okay, I just saw a couple pumps. How do I prepare myself so that I get one of these pumps? How do I make sure that I get my big thing? You take a deep breath and you go to CoinMarketCap and you scroll down and you look through all the different coins and you start to get to the bottom list and you're thinking to yourself, okay, well, what if I went to one that's really low? Because if I go to a really low market cap one and that one goes huge, I mean, I can get the 1,000, 2,000% returns, and that's gonna be the big one. And this creates a game of ping pong in your head that inevitably will just drive you insane, because it's very hard to go in big enough on any one investment to make real, like, true life-changing money, short of just getting a good trade and it working out really well, right? I mean, some people are just naturally really good traders. I would say for the majority of people, though, they're not. And it's kind of like, I think about crypto Twitter. I think of that like Instagram, in the sense that there are many studies that show that if you look through Instagram and all you follow is models or people traveling the world or people talking about how much money they have, you'll inevitably feel like you aren't very good. Like, you have very low self-esteem. Crypto Twitter tends to be people that just talk about how smart they are, how well they're doing, or how much money they're making. And that is not a very accurate that's not an accurate representation at all of the majority of people. I think most people are making some money. It's just, they're not retired yet, right? They're not on the moon yet. And that leads to, overtrading. And this is something like I mentioned at the beginning of the video. This is something that I am doing a very concerted effort not to do this month. I'm trying everything I can not to get sucked into the desire to start deploying capital, because I'm just like anyone else. I see these big pumps happening. I see 50, 60%. I know that voxels, I knew that 5 months ago I bought a ton of it because of the Google VR rumors. I get it. And I'm like, oh man, if I just held that, I would have doubled my money in like 2 days. I understand how that feels. But I also know that the things that I don't remember are the things that are in this book that I write down, which are Bitcoin won. Bitcoin continues to beat all these trades. Bitcoin always went, like it always came back to doing less and just buying in slow always seemed to work. And so I would encourage anybody to just keep this in front of mind. More trading does not mean more money. In fact, it's usually the opposite. Along those lines, I'll link this below. And I think I talked about this like a month ago. This, I think, is such an important point. It's called turtle trading. And it's a study where this guy took a bunch of new traders and he said, listen, instead of trading anything you want, imagine you had $10,000 and you can only do 4 trades for the year. And that includes both, that's the buy and the sell. What would you trade? How much conviction would you need if you knew that you couldn't untrade? You have to be totally confident in your trade. And they had, there were some rules that they had and some foundational principles they had that were really just fundamentals of technical analysis and fundamental analysis for the most part. And it worked really well. And obviously this is one study. I mean, there's many ways to look at this. But I think that the bigger picture of this, or the lesson that I got out of this that's worked really well for me, is anytime that I want to do a trade, I ask myself, if this was the only trade I could make for the next 3 months, would I still do it? And if the answer is yes, then I'll seriously consider it. And if the answer is no, I'll put it on the back burner. Maybe I'll come back to it in a couple of days when I have a different head on my, when I'm feeling differently, when I'm seeing things differently. But analyzing your trades, or at least scrutinizing, I think that's a better word, to make sure that they are the best, asking the right questions, doing your right research. I think that's a very, very important piece of risk management, of portfolio management, and honestly, just protecting yourself from losing money. And that brings us to the final piece. Again, guys, the tax laws on crypto are a gray area. So nothing from this video is official. This is simply just showing you what's going on. And the reason I'm saying that is because it's different by country. It's different by different CPAs and accountants. Whoever you talk to is going to give you their own professional opinion. But it is an important piece. And the reason why it's so important is, as it relates to trading, I think if you look at crypto and you go the most conservative route, which is that every trade, even crypto to crypto, is a taxable event. Let's assume that that's how you're going to pay your taxes. If you do a trade, right? Let's say you buy some Ripple and it goes up 80% or whatever, and you sell your Ripple. If you are treating it as a taxable event, you're going to pay taxes on that profit. Now, luckily, you only pay taxes on that profit, but it dramatically changes the profit margin that you get, because short-term capital gains, federal, state, are very different than long-term capital gains in the United States. Meaning, if you scalp trade something like Ripple short-term, you have to account for, let's say, 40, 50% tax cut, out of that, versus if you buy something and you accumulate it for a year and then you sell it after a year, and it's only 15 or 20% on capital gains, right? So there's just that is an important piece of the puzzle to keep in mind as you're over trading. It's not as simple as, oh, I just made 15, 20% on this rip, on this swing trade. I made 15, 20% revenue, but that 20% of profits is now going to be taxed as short-term capital gains. Assuming that you follow that method. Now, like I said, get an accountant, talk to an accountant. There's a lot of accountants coming up who are versed in this, who are thinking about this kind of stuff. I'm sure the IRS is going to have more information over the next couple of months, hopefully. But this is one of the biggest reasons why overtrading for me is less profitable than buying and accumulating big positions and holding them for a substantial amount of time. Now, I still take profits on something that's made a huge gain, but this is a piece of the overtrading that you need to keep in mind, because I think as much as I am optimistic and I firmly believe that people are good and are trying their best and doing everything they can, I have a big suspicion that April 15th is going to come around. That's tax day in the United States. And people are going to wake up and say, wait a second, I thought I made this much. Why do I have to pay this much in taxes? And I think you just need a plan. You just got to know what you're getting yourself into. So it's an important conversation. It's an uncomfortable one. It's definitely not popular. I know that it's not something that people necessarily want to think about or talk about, but it's the truth. And this is coming from somebody who I've gone through selling companies. I've gone through making money as an entrepreneur and learning about the importance of obviously always paying your taxes and having great accountants and CPAs and getting good advice and doing everything you're supposed to do, but also thinking about this as you're generating revenue and profits, knowing that there are ramifications down the road. So I think it's just an important thing that everybody should be thinking about, especially if you're getting sucked into the FOMO. This can often be a good cold shower to put on yourself, for lack of a better term. But so it goes. The march continues. I'm watching Bitcoin. I've got that. This is really the name of the game. Bitcoin, Litecoin are the two that I'm going to keep watching. And I'm doing a lot of research on a lot of coins right now because I think that there's always going to be more up-and-coming projects that I get really excited about. Obviously, keep you guys in a loop as I find more of them. But yeah, an exciting time. Very, very excited about the next few weeks of December. And I'm really excited about January 2018. So with that, last thing for the SF meetup, San Francisco meetup, 95% confirmed for next Thursday. You will get an announcement tomorrow from the email list on Twitter, twitter.com/Carter Thomas. I'll let you guys know. I have a feeling a lot of people are going to try to sign up for this, but we'll make it work. So stay tuned for that. And in the meantime, everybody, thank you for joining me on this wonderful Thursday. I will see you tomorrow. Peace out.